Tired of financial planners that sound like this? Then you're in luck, because we sound more like this. Welcome to the Insight Podcast. Responsible, relevant, and real financial news and strategies for modern investors.
Hello and welcome back to the Near Sight and Far Sight podcast, brought to you by the investment professionals at Insight.
From beautiful Boulder, Colorado to your ears, this is the Insight Podcast from the money wizards at Insight Financial, discussing the tricks, traps, and tactics of managing an investment portfolio in today's markets. Discussions, topics, ideas, and strategies in this podcast are for informational purposes only. Do your own due diligence when determining if a product or service is right for you. Stocks, bonds, ETFs, and mutual funds all carry their own unique risks, and each may serve a valuable purpose for the right investor. Consult with your financial planner and tax advisor for incorporating strategies and methods you hear on this program, if they're right for you. We receive no compensation for any product or asset mentioned on this show. Here are your hosts, Kevin Taylor and Peter Locke.
Hello and welcome back to the Insight and Farsight podcast, brought to you by the investment professionals at Insight. My name is Peter Locke. In part 2 of this 3-part series, we dig into whether or not Bitcoin is a store of value, its reliability, its application outside of its use as a currency, and much more as we begin to challenge each side of the coin.
So Kevin, you made a few assumptions, a few claims there that I would like to address. So, some of the things that you are some of the things that the assumptions you have or the claims you made and the research you've done would take too long to go into the, like Neil was saying, the history of money, really understanding what money is and the technology behind it. But, you said gold is not finite. So I do want to push back on that because to say that Bitcoin is less finite somehow than gold. So gold, if tomorrow, I think gold is priced at like $600 an ounce or something like that right now, right? And so if gold tomorrow was $10,000 an ounce, gold would not be nearly as finite tomorrow as it is today, right? So there are theories that there are thousands of tons of gold at the bottom of the ocean. There are certainly places we could be digging further into to look for them. There was a mountain in Côte d'Or the other day where they're literally digging it out with their hands. Villagers are digging it out with their hands. So this idea that it is finite, especially over a longer period of time, right? And so we're already seeing Japanese space program has landed satellites on asteroids. It's only a matter of time before, if gold became desirable enough as that store of value, people would go and find it. We could start mining asteroids. We could dig it out of the bottom of the ocean. We could dig it out of the bottom of mines, and the supply would increase based on that demand, right? If gold became $1 million an ounce, we would, you and I would quit our jobs tomorrow and we'd go see if we could pull the fillings out of the back of our mouth and sell that for extra money, right? And so this idea that gold is finite, or really that anything in the physical world is completely finite, people always say, oh, well, land, they're not building in more land. Well, I live in San Diego. I'm looking out the Embarcadero right now. I know for a fact that about 1,000 yards of that land out there is land that we have created over time. There are islands off of here. You've got the islands in Dubai. You've got Chinese building islands in the South China Sea. In 100 years, we may have technology to build an entire new continent. So this idea of finite is really important. And Bitcoin, and I'm gonna make this claim, and Bitcoin is the most finite thing we have ever created. And you say that, we can make Bitcoin 2.0 or 3.0 or whatever, but we've already done that, right? So we had the Bitcoin fork wars in 2017. Bitcoin Cash was created, split off. They had the exact same price when they split off. Bitcoin Cash trades at like $300 a coin now, while Bitcoin has gone to $40,000 a coin, and it's trending towards zero. Just like everything else in this space is trending towards zero against Bitcoin. You can say the same thing about Bitcoin, Satoshi's vision, Bitcoin Diamond, all of, like you're saying, what's Bitcoin 2.0? Well, they're already trying that. Because it's an open source protocol, you can take the code and copy it and go, right? You can create blockchains for free. I can go on a website and create a blockchain in 2 minutes here, but just because I'm running a blockchain on my computer doesn't make it valuable. Just like, if I open an Amazon on my computer, but nobody's using it, then it doesn't have any value, right? And so Bitcoin is unique, and it created this digital scarcity. And people have this misnomer that Bitcoin was like this out of the nowhere creation in 2009. And it's the first one, and it's going to be like MySpace, and there'll be a Facebook that comes out after it, right? But the truth is that Bitcoin is the solution to a cryptographic problem that has been worked on for almost 40 years, right? So since the 1970s, there are precursors to Bitcoin go all the way through. DigiCash, eCash, DigiGold. There have been a number of different examples and attempts to solve this problem. But the creator, Satoshi Nakamoto, combined a few things that made Bitcoin completely unique. And that started the network effects that gave them the 5 to 10 year head start of all these other projects. And that is, it has a pseudonymous founder, right? So nobody knows who Satoshi Nakamoto is, which is extremely important. As we saw with Facebook trying to create Libra 2 years ago, the US government shut that down before it even got out the door. Because they had a founder, they had somebody that could pull in front of the Senate and say, hey, you can't just create your own money. There is no you can't pull Satoshi Nakamoto in front of a Senate panel. The other part is this proof of work, right? And I don't know if your listeners are familiar with proof of work and how it works. I don't want to get into it right now necessarily, unless that's where we want to go. But the importance of proof of work, meaning that a miner or the people that are on the network get one vote per the amount of electricity they're putting in the system or the amount of work that they're doing. And the difficulty adjustment, and finally that scarcity piece, that cap of 21 million. And 21 million doesn't sound like a lot until you realize that 21 million can be broken down, right? There are fractions of Bitcoin. Right now, that number is 100 million fractions of a Bitcoin, right? So the smallest unit of Bitcoin is called a Satoshi or a sat. There's 100 million of them. So if I want to buy $10 worth of Bitcoin, that's not a problem. If I want to buy $100 worth, that's not a problem. Unlike, shares of stock, although there are ways to do that now, you can buy small fractions of Bitcoin. And when the price is $10 million a coin, we won't be talking about Bitcoins. We'll be talking about how many Satoshis does this cost? Just like today, we talk about how many dollars or how many pennies does something cost. And so I did want to push back against that. And finally, the inflation piece, right? So Bitcoiners talk about inflation a lot. I am concerned about inflation. Just this week, we just announced we're going to print another $1.9 trillion. That's almost $6,000 per American. Some of us are going to be lucky enough to get $1,400 in the mail. The rest of that $6,000 goes to projects and other things that you and I did not decide about. Our government decided to print it, and they're going to use it in the way they see fit. And in the U.S., we don't really. You look at these numbers that we put out. CPI or the Billion Price Project from MIT, and the numbers look good, right? The 2% is what we look at. But if you look at asset inflation, right, the three most expensive things that we're going to spend our money on is going to be how we house ourselves, how we take care of ourselves, and the education for ourselves and our children. And those three assets inflate away much faster than the TV in your house or the new piece of technology you put in your pocket. And so that's the important part. Now, the inflation piece in the U.S. it's hard to grasp because it doesn't feel like it's here. But when you look at other countries that are going through inflation or even hyperinflation, like Lebanon, Argentina, Zimbabwe, Venezuela, these people are adopting Bitcoin at the cyclic rate because they need it now. In America, that pressure doesn't feel the same way. And I use the example of a glass of water, right? If I'm the Zimbabwe government and my economy is the size of a glass of water. Well, if somebody pisses on my glass of water, I'm going to notice really quickly. The US dollar is the currency of the entire world, right? We have an ocean of money out there. And so when somebody pisses in my ocean of money, maybe I don't notice at first, but when you're printing $1 trillion here, $1 trillion there, when you've printed 75% of all dollars in existence since 2008 have been printed in the last 12 years, eventually you run out of that. That ocean starts to stink eventually, and those are the things I'll point back. And the final point is, if you look at where this stuff is being adopted, it is being adopted in these places that their currency does not hold value. You're seeing hyperinflation. Nigeria, 32% of Nigerians own some piece of Bitcoin. Venezuela has much higher numbers than you're seeing in the United States. It sometimes can be difficult looking through the lens that we have at what this means for people as a way to exit from their monetary policies in their nation, because we haven't felt that effect yet. But I think that over time, eventually all fiat currencies trend to zero and Bitcoin will be what's left.
Kevin, I see that you have a smile on your face. Lots of really good points being brought up. I do find it really interesting that Bitcoin is an open source program or whatever you want to call it, an open source protocol, and that you said that you can create a digital currency in a matter of minutes, and it could take off as long as it's popular. I mean, that was my understanding with Bitcoin is it took off because it's popular and he made a number of changes that were accepted by a number of people, and that exploded from there. What prevents, when you talk about like the Bitcoin 2.0, and you say that Bitcoin is the one that, will stay around, when it comes to popularity, when it comes to government acceptance, what prevents another digital currency that the government can create that's just as likable and accepted and used by everyone else?
Well, I'll say one. So first and foremost is the network effects, and by that I mean the amount of money and infrastructure that have been invested in Bitcoin. So there are billions of dollars of infrastructure that's already been invested in Bitcoin through the miners, mostly throughout the world. Right now, I'm running a node in the corner of my apartment, right next to my Wi-Fi router. I have a little Raspberry Pi that is running the Bitcoin node. Is running the Bitcoin network, and it monitors the Bitcoin blockchain. There are hundreds of thousands, if not millions of people like me. And that's not a huge investment. That was, a couple $100 or whatnot, but the miners is really where the mining power goes is the power of the network. And so the importance of these networks is that it is a decentralized, non-sovereign network, right? So the US dollar is backed by the US government, the US military. It's backed by the full faith and trust of the government. Bitcoin is not backed by anything other than our belief in its value, and in a way by the amount of money and time and energy that people are putting into this. And if you're familiar and you're in the space all the time the way that I am, you see these developments every day, that there are new developers coming in, there are new miners coming in, there's more energy, more people, more educational resources, more podcasts. All of that stuff adds up over time. And so when we talk about technology and why Bitcoin and not Bitcoin 2.0, I think it's important to kind of, the way that I look at it is I compare Bitcoin to the internet rather than comparing it to a website on the internet. The internet is here. There is no internet 2.0. Nothing is going to replace TCP/IP at this point. You have applications built on top, the MySpaces and the Facebooks of the world, and there will be applications built on top of the Bitcoin blockchain and the Bitcoin network. We're already seeing that with things like the Lightning Network, which if you're not familiar, is a instantaneous payment system that is built on top of Bitcoin so that you're not using the base layer. If you think of Bitcoin as sort of the heartbeat of the new monetary system, we are slowly building the arteries, the veins, the capillaries that are going to be required to do the plumbing of all of the Bitcoin, of Bitcoin and all the transacting and the medium exchange of Bitcoin. Right now, we are building a store of value that a new monetary system can be built on top of. Down the road, you can see people building on top of that things like smart contracts, things like instantaneous settlements. But that fundamental network effect, that is what's important, and that is why Bitcoin will not be replaced.
So, and Kevin, before you respond, I wanted to chat with you about that kind of that heartbeat as the centerpiece, and like everyone having access to one global system in which you can trade anything on it immediately, have immediate, transaction, have a receipt, have confirmation, have all of that. And my brother was saying that Avalanche or whatever this AV, he's been hyping it up to me every day. He freaking texts me, "Oh my God, it's going to be the greatest thing since sliced bread. You need to get into it now. I'm going to be filthy rich." And I'm like, I mean, come on, like how many, but you're telling me that Bitcoin's going to be doing this. He's telling me that Avalanche is going to be doing this. And then the other person's telling me that this other thing is going to be doing it. And you sound like, well, Bitcoin is going to make it because of how much time and money's been put into it and this infrastructure has been in, but I don't believe that just because time and money is being put into something, a couple $1 billion is going to make something the greatest thing that, is going to stick around. So if Avalanche comes around and makes this coin that if they reach a certain level, they make more or something along those lines, sounds like the dollar to me. And then that you can kind of, open it up to the general public and everyone in the entire world has access to a free market and can trade. I'm just having a hard time. Like, I get Bitcoin's appeal and I want to get into digital currency, but having, I mean, your stance on taking your entire net worth and investing it all in Bitcoin seems like a really aggressive approach to something that could easily, from what you've told me so far, from my understanding, could easily be outdone by something else if it was popular enough and people liked it.
So Bitcoin has a 12-year history, and it has the most global recognition. It has those network effects. Everybody, including myself, I think there are very few people that are Bitcoiners that didn't go through some phase of, well, okay, I missed Bitcoin. I'm going to look at these other coins, right? I'm going to look at Ethereum. I'm going to look at, XRP. I'm going to look at Avalanche, whatever it is that Ben's looking at these days. I'm trying to talk him off the ledge. Like I guess my point of view on that is I've been there, and most of the people that I am in this space with, other than your very original, your original Bitcoiners, you guys in the 2010, 2011, when it was the only thing around, very few people don't get sucked into this altcoin world at some point. I certainly did. I was like, well, these transactions are too expensive. They take too long. I got this thing, a transaction 2 seconds, and it cost me nothing, and that's great. But with those, you are sacrificing the things that make Bitcoin special, make digital currency in general special, which are that decentralized network. If you and I have one Bitcoin, you and I have a blockchain network, we call it Silvestro coin. And you say, hey, I want to transact on your network, and you send me an email, I can say, yep, got it. Like it's on my spreadsheet. But there's nothing stopping me from changing that. There's nothing stopping you from attacking my computer system and hacking it. And so it has no security. And so these small coins, and we've seen this a number of times, these small coins get eaten by what's called a 51% attack, where a bad actor comes in, they take a large amount in a proof of work system, you take a large amount of hashing power that overpowers the entire network, or more than 51% of it, and they rewrite the blockchain, and the thing goes to zero. And so Bitcoin is important because it has this incredible level of security. So right now, the hashing power on the Bitcoin blockchain is 132, followed by 18 zeros, guesses per second, or hashes per second. There is nothing in the world. Not only is there nothing in the world, like it is the strongest supercomputer in the world by factors. I think I lose count. I kind of stopped, keeping track of what the hash power is right now, but I think it's somewhere in the neighborhood of 100, 1,000, 10,000 times more powerful than any other network in the world. You can't replicate that with some Avalanche coin. You can't replicate that with a centralized network. The benefits that you get from this anti-fragile super predator of money cannot be replicated and will not be replicated by these coins that are coming out today and saying, hey, we're new, we're better, we're this, we're that, we got fancy branding, we've got privacy, we've got fast coins, we got whatever. They don't stand up in the same way that Bitcoin has, because Bitcoin has been tested, and it's been tested again and again and again for the last 12 years, because it's the largest honeypot in the world. It's a $1 trillion honeypot. If you can figure out a way to hack it, if you can figure out a way to edit it, if you can figure out a way to double spend the coin on it, you can literally print yourself or write yourself money. And the 12-year history with the most powerful and most intelligent, most aggressive hackers in the world, it has never been hacked. And that is what's unique. And that is what these other networks do not stand up to, that sort of attack and that sort of anti-fragility.
No, that's super powerful. Kevin, I'll let you take the floor. It seems like you've
sorry, Kevin, you got a lot to say.
Okay.
All right, here we go.
I don't know where to start, though. First I'd start by saying I'm not impressed with a 12-year history. I mean, I've seen the tulip phenomenon took 12 years. There were people going, nah.
Don't throw tulips at me. It's 2 years.
First introduction of tulips, to the tulip phenomenon took just over a decade from when.
Can we share charts on this? I want to do a PowerPoint during this.
Yeah, no, I understand you're saying tulip phenomenon, like the spike at the end. I'm like, this might be this last 2 years in Bitcoin could be the spike at the end, and I don't know. And I'm not saying that there isn't some value here. I absolutely 100% agree with you on things like locking down contracts, standardization of contracts, and stuff like that through the technology is great. I've seen some applications in healthcare. I absolutely love the technology, and that's what we coach most of our investors to get on board with. But there's a couple things I think you've said here that I think are contradictory. The first of which is you're saying it's more finite than gold because we could go out to you could take rockets to the rest of space, and that would be an interesting argument if we've ever done it, right? Like if we'd ever gone to an asteroid and mined it for gold, and that upset the market. But I don't have a history in that, but I do have a history in people printing currency. And so, we have gone through thousands of currencies that lose futility through one or find their futility through one means or another, either because the country that supported them are no longer there, or the governments of the world banned them. In the last 20 years, we've seen people try to mint their own currencies, and they were with like physical coins and stuff too. So I don't think you have a 12-year history, and I wouldn't tell people that, because we have a 200-year history of using the dollar and watching it expand. And so, and the other thing is you said that so it's the least, how'd you put it? The least finite thing we've ever created. And then you said that there's other replications that have happened. And I think that's the point. And you said the real strength comes from the miners. And I think that's going to be its downfall too. I think as soon as the pool starts to run dry, as soon as these mints, the mint pace that they're creating these coins, these tokens, starts to dry up, there's less of a sexiness, there's less of an appeal for people to participate, and they will move on, just like they've done with everything, just like we've gone through every, cycle of music and every cycle of this, that, and the other. When the pool runs dry, you have to go back to something. We're going to go back to the dollar, and they're going to find some other new cool, or even less cool. It doesn't even have to be more cool. It could literally be something less cool, but tolerated by the US federal government, but tolerated by the Politburo in China. And they could, adopt this, and it would be obliterated very quickly, because there is no utility in the coin itself. It cannot be converted into anything else. And thus I think that you kind of run aground. So you're saying it's both finite and there's, infinite, innumerable options to permutate it. And I don't understand how those two can be true. And I do think that what you're betting against is innovation. When you're saying that there's not going to ever be an alternative, that you're betting against somebody not being able to come up with something that's one on top of the coin. And you're right, like the internet is there, but we've changed the internet. Go rewind the clock and go look at 1990 internet. You can go over to my mother-in-law's house, download her ding, 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 internet, and I can tell you that there's a substantial difference. We're going to take this leap forward into 5G, and you're going to see internet take on a whole new look. And I think when you're betting against innovation, you're always going to lose. And I do think that because this is open source, because it is infinitely copyable, there's going to be some kind of permutation that has more appeal, or even is more lucrative. The miners start shifting over and saying, "Hey, remember how great this thing was in the 2000s, and we could get we could get coins at this pace. The new coin is over here, and we can do the same thing. We can recreate the wheel, and it's got this other, bonus feature to it, or it's just tolerated by, despots of the world again, or whatever it happens to be." I think as soon as there's a +1, you see those miners, just like the market is driving the price of Bitcoin up, the market's going to drive the new Bitcoin. And those miners you have no fidelity. It's a gang of thieves. They will shift. They don't owe you anything to not sell their coin at a price, right? And then go mine new coins. And that network can shift very quickly on you.
Hey guys, could I test out see if I understand? John, this question's more for you, but
yeah.
And Kevin, I kind of just playing off what you'd said. I think, no new internet is kind of and betting against innovation. I think that my understanding of Bitcoin is it's kind of like a protocol. And so while the internet connectivity speeds have, definitely gotten a lot better, thank God it's not dial up, the protocol is still the same. And so the internet's still running off of the TCP/IP protocol. And Bitcoin is the first kind of to market with a protocol for essentially the internet monetary layer. And so the value for Bitcoin is to be able to transmit value around the globe in a permissionless, totally decentralized manner so that it can't be stopped, it can't be censored. No one can seize your bank account in essence, because you're holding Bitcoin. And the power of being distributed means that the economic incentives are kind of aligned so that those miners, they could go shift to something different, but they're very incentivized to stay mining Bitcoin because Bitcoin is worth a lot of money and the new coins are not. And on top of that, as the supply kind of diminishes over time in a pre-planned way that the protocol lays out, then they're getting fees for moving the money, the Bitcoin, the value across the network. John, because I'm still learning, but I'm really, like I said, fascinated. Does that line up with the way you understand it?
Thanks for listening to part 2 of our 3-part series. Make sure to tune into part 3 at investmentwithinsight.com.
Thank you for listening to the Insight Podcast. Always responsible, always relevant, and always real. This has been a production of the Insight Corporation, located in picturesque Boulder, Colorado, home of the Insight Full Plan and Peak process. Like us on Facebook or schedule a free consultation for investment and planning advice at investmentwithinsight.com. That's investmentwithinsight.com for some one-on-one time with our fee-only certified financial planners and investment fiduciaries.